Good afternoon, everyone, and welcome to the Daily Volatility Box Report for November 11th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we'll take a look at how you could have used that aggressive technique that we've been discussing all of last week today, right? And the reason we have the luxury of looking at today on the aggressive note is because we didn't really have any other trades in the 7 other markets that we care to look at. So we'll take a look at the gold futures and we'll apply the aggressive technique where we're starting to look at trades outside of just that 6 to 7 a.m. hour, trying to find more opportunities, but opportunities that we then have a second filter for to make sure that they fit our parameters. And this is if you're an aggressive trader. If you're a more conservative trader, then today might have been a day that you had no trades. Another trade that we'll also discuss is that in Boeing, and this was using our Stock Volatility Box. Now, typically we've talked about all of the trades that have worked so far using our Stock Volatility Box, but today we'll talk about Boeing, which did not work, and I'll give you some numbers around options so you also know what you should be willing to risk, at least if you're trading the shorter dated options. And so using our Stock Volatility Box, we'll take a look at Boeing. We'll also take a look at T-Mobile, which triggered when we had news hit the market of their CEO taking over WeWork. And then Boeing hit our actual volatility box scan when we had news that the 737's date could be as soon as December. And this ended up causing Boeing to move up higher, which I was a little surprised that we got stopped out of this trade. But again, just goes to show, for those of you that at least watched the video I sent out last night, that quote that we started, right, with Vinod Khosla, know what you don't know and accept that you don't know it, which is what we sort of knew here. I think that we were going to get a fade. And if we did get a fade, I'll talk about the numbers where the risk to reward on this trade was just ridiculously nice. But if not, then that was one of those things where you just accept the risk. Another trade that we'll take a look at is an ACAD, and we'll see if there's some lessons to take away here that we'll add into our insights page. And then we'll take a look at some trades that may be giving us signals for tomorrow in CNP, ACAD, and Boeing. And these are ones that potentially could be trading, very similar to that signal in Coke for our Volatility Box members that did watch that Stock Volatility Box video that I sent out late last night. Now, tomorrow on the calendar, we don't really see anything that calls for our attention. And so once again, we'll be using our aggressive volatility box test, and you may continue to look at a few more entries in markets outside of the ones that we care to look at. So things like gold, things like copper, using this filter that we're going to talk about if you are looking to trade a little bit more often and you don't mind taking on that risk, right? You need to make sure that you accept from the get-go that you accept the risk this bears on your account and take responsibility for the trade. But after that, you're now starting to once again play probabilities, right? And so you need to define that you're okay with the risk before you take it. But after that, these are still very valid trades that do set up. We'll start with our gold futures first. And so here, we're typically looking only for entries between 6 a.m. to 7 a.m., right? And this is where we follow our normal volatility box plan, where if we get a fade at either side, we're taking it no matter what. Now we're looking at gold outside of that period, but we want a different filter. And for that, we're using these Dynamic RSI colored candles that Keith has made for us. Right. And so the thing that we're looking at here is to start to see if we do get breaches, which is what we had here, where we also get a confirmation of this selling pressure starting to either halt or then turn into buying pressure. And this all depends on what time frame you like to trade, where you'll see these colors. So we'll start with our 5-minute chart for those of you that like a little bit less noise. And using our 5-minute chart, really reading this, we see red to orange, and then we have our entry when our candles are orange, which can let you know that, okay, this is caution. Anytime from here to here really is where you're looking as an entry. For us, our orders are still parked at that volatility box using this 5-minute chart, where I already saw that we had this orange sort of stalling off. And so that was enough sign that, okay, it's not deep red anymore. We've already turned. And so at that any slight dip, if there's a wick, I'd like to pick up that contract so that I may be able to play this move up. But if we come down to a 1-minute chart and we go back to the same area of entry, then you got an even better entry, right? We see we're stalling off here. And this is where on the 5-minute chart, we're orange. But then as we cross, we're actually red. And we have the ability to see this level of granularity on the 1-minute chart if that is something that you're comfortable doing. And so using that, we're now looking for when these red candles start to halt and change colors, right? And so we see red, 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 and then we get to orange. And from orange, we get to yellow. And then from yellow, we get to green. and this is almost like a stoplight, and it's up to you to determine where on the spectrum you're okay jumping in this trade. And now all of a sudden, instead of an entry at the cyan entry line, you have a slightly better entry that affords you to have a better risk to reward ratio, right? And so using that, we then had this trade set up in gold, which gave us 5 points for that first target, and then 5.3 points as we hit T2. Now that was a total of 1030, which then also triggered what is a second trade using the aggressive volatility box. And again, now we'll stay on our 1 minute chart here. And what we'll notice is that gold basically ended up scratching for the day. And so you had an opportunity to get off for break even, or maybe a few dollars in losses if you did take the second trade. But we see the same sort of thing, right? We see green to yellow to red, and now that's giving me permission to enter, and at the very least I'd like to enter at the cyan entry line. And so at this touch back is where you got your entry, stop outside of the volatility box, same first target, and we didn't get either side's push through. And if you happen to take this trade off into the afternoon, which is what we do, then we got out for break even. And if you stayed in, then so far we're still making our way towards what would be either a T1 or a stop out. Now let's take a look at Boeing. And in Boeing here, I have our conservative volatility box plotted, and Boeing hit our scan right here, right? And so this was after Boeing had already breached outside of even our conservative volatility box on absolutely no earnings. And so the reason that happened, we can take a look at this live news, right? We can see news around the 737 MAX flights starting as early as January, possible from December, plane deliveries. And so we essentially see that the timeline for the 737 MAX has been pushed up, which is the reason for the optimism in Boeing. And so the specific news story that I actually saw right before I took the trade was this guy right here. And this is the reason why I decided to fade Boeing and have the confidence to do so, even though we were so close to that 10 o'clock cutoff, is the reason for this sort of verbiage, which was the word could. Right? And so that to me was, okay, this is one of those news events that we might be able to fade. And so I looked at fading Boeing outside of the volatility box. And this to me was another benefit, the reason to take this trade. It hit our scan right around here. And so this is the first opportunity you even had to look at Boeing. And so the play that we had here for us in particular was, since we were so already deep into the clouds, we bought an out of the money put with the intention that if we did have a move back to where we thought we originally could go to, then that would be a substantial move in the out of the money options where you have a really nice percentage gain. Right? And conversely, if we went the opposite direction, I did accept that out of the money put would lose value a lot quicker, but that was a risk that I was willing to take given the risk to reward that potentially occurred on this trade, right? Since this was something close to, let's say, 25% in your put options price, but a move down lower would have been well over a double in your options and would have been a really nice gain had we got it. In fact, we did get a really nice gain as we had this flush down, but it's when Boeing started to reverse, right? The very least that I was looking for was at least a touch of what would have been our entry on the clouds. And this is the first level where I was looking to peel off some contracts, which unfortunately we didn't get there before reversing. And my stop was outside of this high, well, what was the high at the time. And as soon as we made a new high at this point was where I was stopped out of my options, right? And so looking at the numbers on this, we can see that when I entered from to right here, we were up right around 15-20%. And then when we actually got stopped out was closer to 25% in a loss of the options value, 25 to 30% actually. And what we can take away from that is the risk of out of the money options. And that was, since we didn't have the move and we also chopped a little bit of sideways, the volatility component of that option went completely down. I also lost out on the fact that it was an out of the money option with the deltas going against me. And so both of those in conjunction led to a deeper loss in this option than, say, if you had used an at the money option, knowing that price came exactly right back to where we were. And when we were stopped out, it wasn't really all that much higher from our entry price, right? And that's why that out of the money loss is a little bit more important. And there's a lesson that we can take away from this. However, keep in mind that if you did have that really nice flush move down lower, that out of the money option would suddenly have been growing in deltas and moving in the money deeper and deeper, and that would have led to a really nice gain in the Boeing option. We'll also take a look at T-Mobile. And so our entry in T-Mobile, so T-Mobile hit our scan in this big spike, where again, off of a news event, we had the news that John could be the next WeWork CEO. And on that spike, T-Mobile crashed. T-Mobile has done fairly well under his leadership. I can see why the markets were reacting that way. This hit our scan right here. And so unfortunately, T-Mobile was one that was just way too quick for us to be able to catch, right? From the period of scan to the spike up, that was all in, I believe, under a minute and a half. There was really no way to catch this trade, but it was really interesting to see where T-Mobile spiked down to, right to our volatility box entry line before reversing. And I think that should start to at least help you build the confidence in these levels, even though you weren't able to take this trade. And like we said in yesterday's video, this is really just a start in terms of our scans. We have more than 8,300 symbols, and so there's almost always going to be an entry taking place somewhere, and so it's perfectly okay that you miss these entries, but the thing to take away from this is the confidence in these models, and the confidence in these levels, and the confidence in the idea that price stays within these levels. We also said we would take a look at CNP. And so if we now take a look at this from that trending perspective, if CNP tomorrow opens and then makes its way down below this volatility box cloud, and so that's really right around 2730-ish, if we actually try to be precise, that's 2728. And if we start to drift down lower below that in the first, let's say 15 minutes of market open, then that would be a potential heads up sign that we have a bearish trending market here in CNP. And then another one that we'll take a look at is ACAD. And an ACAD in particular, so this again, we had some news, and this is around pharmaceuticals, right? And so I think this is another thing that will get added to our insight is any pharmaceutical FDA related event news, knowing what the biotech field usually has in terms of volatility, using the conservative volatility box will become our sort of go-to method here. And that becomes another reason why we use the conservative as opposed to just earnings. And so we'll add this to our observations, but using that with our conservative volatility box here, we made a move almost the length of the volatility box. And so tomorrow, if we make a move well above this volatility box high, so 46.71 in the first 15 minutes, then that could be a potentially heads up sign that ACAD is looking to trend higher into the rest of the day. All right, so hopefully tonight's video helped you understand how to trade a little bit more aggressively on days like today where we really have muted activity in the indices. There's opportunities setting up in many other markets. Today that included gold, but it's the idea of knowing when to take gold, which we now have those dynamic RSI colored candles as filters to help us do. You can also use any other indicator that works for you if you happen to have, say, something you've built yourself, but it's the idea of being consistent, and it's the idea of noticing if that helps you understand with the context of an edge whether or not you should be taking that trade. For us, these dynamic RSI candles are starting to work out really well. And again, we'll be looking at some stock volatility box entries for tomorrow, very similar to today's plan. We'll see what sort of action we get tomorrow, and we'll see you in tomorrow's nightly update. Take care, everyone.